Hello, guys. I wanted to make a quick video today to explain my post earlier about VIX 1D crush and morning bounce, and also wanted to talk about my observations today on the market and how I think the rest of the day is going to go. So, in the post earlier today, I talked about volatility crush and how that led to mechanical bounce in the market. So today in the morning, from yesterday's close here, we opened higher, and that is kind of a mechanical thing due to VIX 1D level at Friday's close. So we have regular VIX, which is implied volatility for the next 30 days, but we also have VIX 1D as well, and this is just implied volatility for the day for the next day. So the mechanics of it is similar to regular VIX. Usually, when the market goes down, VIX 1D will go up, and vice versa. So on Friday, VIX closed at a very high number, so 28 here. And whenever you see VIX 1D close at high teens or higher, that'll usually bring some kind of a mechanical bounce in the morning the next day as that volatility crushes to a much lower number. So as you can see, VIX 1D closed at 29 on Friday, and we opened at around 11, which is a lot lower number. And you can see in the past as well, right? So whenever you see big increase in VIX 1D, the next day it always opens lower, right? So you see here, always opens lower. And these periods as well always opens lower. So that's kind of a mechanical thing. And whenever it does this, S&P, at least in the morning, will get some kind of a bounce. So the bounce we saw in the morning, that's not really a fundamental relief in the market. So that's just more of a mechanical thing there. So how has the market been doing since the bounce in the morning? So it's been kind of fluctuating in a range here. I wasn't sure if the rally was gonna keep going through the early afternoon or not. It looks like it's not doing that. If we look at the S&P on an hourly level, so I'm gonna switch this to 1 hour. So this is last Friday, big drop here, and then we bounced up here, and then we've been kind of we're consolidating a little bit, but we're kind of dropping. And if I bring in 9 period EMA, so moving average exponential, it's already set to 9. So to me, it looks like um, after the Friday close right here, in the morning, we tried to rebound to the 9 hour EMA, and we kept trying. We hit this line here, we hit this line again and again, and we're not able to break above that, right? So what I would expect for now is for this pattern to continue throughout the rest of the day. So as this line kind of goes down and flatten out a little bit, we'll continue to kind of fluctuate up and down and try to hit this line, but it doesn't look like we're gonna break above that line. And if I bring in one more exponential moving average here, I'm gonna change this to like 200 here. So you can see on Friday we kind of stopped at this level right here, so 200 EMA. And for the rest of the day today, I would just expect the S&P to stay between these two levels. So to the ceiling, I would say low 700, 7,400, right? And if we do get more move down, like it probably won't break below, I don't know, 73.90. So for today, like I'm expecting S&P to settle below, low 7400s and high 7300s. But there is one factor that could totally change this view, and that is any significant tweet or some kind of an interview from Trump about the Iran situation. He's done it time and time again in the past. Whenever the market is struggling, and especially if the Treasury yields are above certain thresholds, he tends to send out tweets about some kind of a peace treaty with Iran being imminent, or have some kind of an interview about Iran and says positive things, and that used to provide some kind of a relief to the market. So obviously, since last Friday, the market's not doing well. But if we look at the treasuries, the treasury yields, especially um, 10 year and 30 year, this is above 4.5. So the 10-year treasury yield is above 4.5, and 30-year treasury yield is above 5%. And usually those are kind of the critical thresholds that Trump and administration do not want the yields to cross. So these are usually good signals to look at. Usually, some kind of a taco will come from Trump regarding Iran whenever you see yields this high. And timing wise, the we're actually going to have treasury auctions, 10-year and 30-year treasury auctions pretty soon. So I think it's in their best interest that they say some kind of positive things about Iran and try to get these yields down at least before the auction. Yeah, and looking at this pattern as well, I just noticed this, but this could actually potentially form some kind of a head and shoulder. But we'll see how things pan out with the yields. So I just want to show you real quick about the auction schedules. So you go to the Treasury Direct and you look at the upcoming auctions, and you can see right here, right? So the 10-year auction is scheduled for June 10th, and 30-year auction is scheduled for June 11th. So again, Trump administration would love the yields to be lower than now before these auctions take place. So that gives us rest of the day and tomorrow for Trump to say some positive comments about Iran or talk about deal being imminent, and that could, I guess, potentially provide some relief to the market and get the yields down. So we'll have to keep an eye out for that. This afternoon, it's early afternoon right now in the Eastern time, so I don't know. We have maybe like 2 or 3 more hours to go today, so we'll see what happens. So my strategy for now is to incrementally accumulate put positions. So in my post earlier today, I talked about buying puts as well while there was that morning bounce. Um, one thing to keep in mind though, again, there's a possibility of Trump taco, and if you buy too much puts right now, and some kind of a taco happens and some kind of a breakthrough happens with Iran, the market can rally off of that, and you would lose so much money on the puts you buy. So that's why I would recommend buy some put positions incrementally, maybe throughout today and some tomorrow. I don't think there would be, without the Trump taco, like I don't think there would be big movements in the market until they report CPI on Wednesday. I think the market is probably cautious and skittish after everybody got blindsided last Friday from the jobs report. So we'll see how the numbers come out. I think until then, I think we'll probably be more or less flat or sell off a little bit more mildly. But I'm personally not expecting like large movements until the CPI reports are released. So yeah, that's it for this video. I just wanted to do a quick recap of what's been happening in the market today, and wanted to raise a possibility of potential taco or some kind of positive news regarding Iran. And also, my strategy is to incrementally accumulate put positions throughout this week because I believe that the next couple of weeks have a lot of potential negative catalysts. And I'm gonna make a separate video to really kind of talk about all the events that are laid out over the next couple of weeks and why we need to be cautious. So thank you for watching this video. I'll see you in the next video. Thank you.